Alrighty guys, what is going up? I hope you guys are all having a great and fantastic day today. Now in today's episode, we're going to be talking about the top 3 studies that you must have for swing trading, day trading, pretty much for trading on any platform. I'm going to be using the Moomoo trading platform. So if you guys want to get a free stock, you guys can go ahead, smash that link down below, sign up, and you get a free stock. Now when you guys deposit another $100 on your account, you get another free stock. When you guys invite friends, family, relatives, anybody you know, you get a free stock. So you guys can keep doing it and you guys will literally get free money, free stock, and you can sell it, you can trade with it, and just overall invest. But before we jump into the video here, I need you to do me a favor. The very first one is go ahead, smash the like button. Do what you guys do, like, subscribe, comment. You guys know what to do. But we're going to be going on the computer here, and we're going to be talking about the top 3 studies that I use and why I use it. Alrighty guys, so as you guys can see, we are up and loaded here on the Moomoo trading platform. We do have ticker symbol AAPL, also known as the over $1 trillion company, Apple. Apple is one of the best stocks to swing trade in my opinion, and really you can day trade it too if you're smart. So looking at these here, you guys can see we do have the RSI, the volume, and the moving average lines loaded up here on the chart. These are the top 3 indicators and the top 3 studies that I use for success for swing trading and day trading. So what is the RSI? This is just the relative strength index. This tells you the overall strength of the stock. What a lot of swing traders and a lot of day traders tend to do, when the stock is breaking above the 80 mark here, you guys can see in the kind of in the left-hand corner here, when the stock's breaking above 80, this is when a lot of investors and a lot of traders will tend to sell their shares and wait for the downfall. So as you guys can see, when it broke above it here, we got that little sell-off right above the top here. So we got this sell-off. It kind of squeezed back up. It bought back up here. And what do you know? It broke above the 80 mark here. We got this huge sell-off here. So this is when a lot of traders will tend to either sell the stock or short it and just overall just kind of get rid of their shares. They predict a downfall for the stock. Now on the opposite side, when the stock hits the, really when the stock breaks above 30, this is when a lot of traders will tend to buy the stock. So when a lot of traders tend to buy the stock, you know, we'll have a nice little price action. So you guys can see it's really at 30 on the dot almost right now. And what do you know? We got more buying pressure, which caused it to kind of go up in price. So what I like to do is I like to look at all 3 of these. I like to look at the RSI, the volume, and then the moving average lines. So for those of you that don't know what moving average lines here, we do have the orange, blue, and pink. The orange here is the 20-day moving average line. The blue is the 90-day moving average line. And then the pink here is the 20 moving average line. Or not the 20, the 200, excuse me. So the 200 is definitely the strongest on the chart. The 90 is the second strongest, and then the 20 is the weakest. So what does that mean? So moving average lines act as pretty much 3 things. First one's support, second one's resistance, and third is overall trend indicator. So what does all that crap mean? So when the stock's above it like it is right now, so it's not below it. If it was below it, it would be trading underneath it. When it's above it, these moving average lines act as support. So support is just when traders tend to get buying pressure and it pushes the price up. So as you guys can see, it hit it here, bounced up. We're looking at the 200, the pink one here. So as it hit it here, bounced up, hit it again, bounced up. Continued to go up, hit it here, bounced up. Continued to go up, almost hit it here, but bounced up. You could call that a hit off the moving average line. So we know that, okay, there's previous history of the 200 moving average line acting as support. All right, now let's go ahead and look at the blue one here. So we're going ahead, we're looking at it. Okay, hit it here once, broke below it. Going ahead, looking at it here. When the stock fell below it, boom, it hit it. Act as resistance because now it's below it. So it hit it here, resistance, kind of sold off, broke above it. When the stock breaks above it, it acts as support. So it hits it here, bounces up, continue to push it back up. So when the stock kind of falls below it right here, it comes in contact with it, but now it's below it. So it's resistance. So it hits it, sells off, breaks above it, bounces, pushes back up. So if you guys understand this, you guys will literally be like textbook traders. But now the The orange is the weakest on the chart. So this is when you'll have a lot of them just kind of break below it, and it doesn't really act as much. A lot of people will do a couple of things with the 20 moving average line. They like to make sure if they're going to short the stock that it breaks below it. So it's just kind of one small support line out of the way. So as you guys can see, it breaks below it. This would have been a good time to short it, setting your stops right above the moving average line, just because if it got buying pressure, it would probably hit it and use it as support. But since it fell below it, it's now resistance. So resistance all the way here. And you really could just set your stop losses right, keep moving it down and just setting it right above the moving average line. So you just keep waiting, and you'll probably end up selling out right here. But so using these moving average lines, I like to kind of use all three of them together. So I like to use the moving average lines, the volume. If you guys aren't using volume, you're probably one of the stupidest traders out there, in my opinion. The reason why I say that is because you need good volume for day trading and swing trading. So to pretty much just to reduce risk, it's best to stick with stocks that have the minimum dollar amount volume to anywhere from 20 million to 25 million. So as you guys can see, this is a large cap stock here. And a lot of traders trade this each and every day, no matter what, because it's Apple. It's one of the most popular companies out there, and a lot of people use it, and a lot of institutions buy it, and they put it in like ETFs. They put it in the S&P 500. It's pretty much in everything. So you want to make sure that you use all three of these, just because if you're looking at it and the volume, let's say, falls off, so kind of like how it did right in here. Look, what do you know? We have this selling pressure. Pretty much when the stock falls off in volume, this is when you'll have a tendency to have the share price dip a little bit. Yeah, it's not too big of a deal, but if you're day trading the stock, like if we go to one of the gappers for the day, if we go to, let's say, where is it? CETX here. Volume is key. Volume is one of the most important things that you guys can have. Why is this taking so long to load? There we go. So as we go back here, let's go to just the 1 minute here, just to make it easier. When you guys here, let's zoom in. As you guys can see, we had this huge buying pressure right here. As the stock kind of sold off here, as you guys can see, look at this trend: losing volume, and look at the next couple of candlesticks, sold off. Looking here, volume up, sold off. Going up, sold off. So you want to make sure that there's some volume indicators, just because you don't want to go into a stock blind. If that's, say you went into, what was another one? Like this one, I believe the stock didn't have a ton of volume. Look at it. Yeah, we caused a ton of volume right here. Boom, instantly down. And look how much the stock fluctuates. This is a crappy chart. It's terrible. So you got to make sure that there's some sort of volume, or you're gonna lose money, and it's not gonna be good. Oh wait, I'm up $3 on my swing trades. That's kind of cool. But overall, you guys want to make sure that you guys are using one of the premium scanning and premium softwares out there. That's why I like to use Moomoo, just because they keep everything all in one place. You don't have to buy like trade ideas to use like the pre-market gappers, or to like have like an AI monitor. I like to just have it all in one. That's why I use Moomoo. But those are my top 3 studies that I use. I hope you guys enjoyed it, and I hope you guys learned something. And if you did, drop a subscribe down below. Don't forget about the free stock that you guys can get by signing up with Moomoo with my link. And go ahead, like the video. All right, guys, have a good one. Remember to always stay happy, stay positive, and I hope you guys have a great rest of your day. Take care. Have a good one.